There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome to the Trading Justice Podcast. My name is Matt Justin. I'm the host, obviously, here. I want to introduce my amazing, talented, amazingly beautiful guest, Milena Govich. Milena, how are you?
I'm great, Matt.
How's the training coming?
Pretty good.
Well,
I am a newbie at trading. I met you beginning of last summer and at one of the workshops and was immediately fascinated by what you had to say. And so I started off, just paper trading, and then I started with a live trading account I think last September or so. So I've just been live trading for just under a year. And I'm loving it. I got some good solid wins. I got some solid losses.
Oh, we're going to talk both about the wins and the losses. Absolutely. 'Cause, as you know, when you're at a workshop like that, you get you're so excited. You just get so fired up to go out there and really start trading and making some money. And it's the one thing that we all understand, though, is that this is a massive market. It's a complicated market. And it takes some time to really, truly understand not only the markets as a whole, but the technical analysis and the options trading and whatnot. And what I've always said is, for you really to be successful long term, you have to be able to trade multiple market cycles. Both the up, the sideways, and the down. And you got to be able to see how the market responds to economic news in one market versus the next. And these things take time, and they're growing pains. And don't get me wrong, it's an amazing experience, and you and I are both stubborn enough to get through those growing pains. But talk to me about what type of trading do you typically do?
Well, in like our broader portfolio, we have some investments. They're long-term things. But right now, since I'm a new trader and I'm just learning, I've set aside a very tiny percentage of our overall portfolio for me to learn and practice with.
To kind of dabble in?
Yeah, exactly. And
if you lose it, it's not that big of a deal? Yeah? Gotcha.
Well, I think part of it is just, I know you guys have talked before in the podcast about the emotional aspects of trading. And so I think it's really important as you're learning to not feel like you're risking more than you can really afford to be risking.
Well,
because then if things go wrong, you have this big emotional reaction, and then, I'm going to quit trading forever. This is too risky. I don't want to do this. Then you stop learning after that.
Well, you should never put anything into, and the stuff that you're doing in your individual account where you have that money set aside, it's in the options market, correct?
Correct. Yeah, I'm mostly doing credit spreads. You saying right click sell, right click sell.
Listen, if you can, I was at a workshop this past weekend, and I was in Dallas. And I love Texas, by the way. I literally, that's maybe my favorite state in the union if they actually categorize themselves as part of the union.
Careful, Matt. I'm from Oklahoma.
Listen, I get it. I understand it. There's fighting words in there. We might get into some Texas Sooner football here in just a little bit.
Don't do it.
If Oklahoma and Texas really came together, they would realize there's a lot of commonalities in the two mentalities of the states. But I get it.
That's true. Okay. Go ahead with your story.
Independent mindset, thought process. Well, I was there, and I was teaching people, how to trade options and whatnot. We're on day 2 of the workshop. And basically, I just kept saying, they kept asking me these questions about why this, and I just kept saying, I don't care. And I said, guys, you don't understand. I'm going to say this all day long because what you're asking, I understand you have a thirst for the knowledge, But in the marketplace, we don't care. Right click and sell. And until you understand it, just keep on selling 10, 15, 20 deltas, and you're going to be successful eventually, you know. And it's true. The trading aspect of everything is easy. I mean, you can do an iron condor in 15 seconds. Order filled, put into the market. So, you know, you right click sell, but you got to learn, you got to grow, you got to, you know, understand kind of how the management cycle goes. Give me one of your give me a horror story here in trading. Let's scare the trading justice peeps a little bit.
Well, I think fortunately I haven't taken on positions that are so huge, and I don't do any naked positions or anything like that. Everything is a spread. So I wouldn't say that I have any really major horror stories, but I think the most difficult thing for me, especially as a new trader, and I think for a lot of traders, is just predicting how the market reacts to news. Because one of the first losses I had was after one of the Fed meetings in the fall, and we were all expecting that they were going to start slowing the taper, but then they came out and said, we're not, and so the market popped up, and I had a bear position on something, and it popped up into my short strike, and I was very upset about that because nobody was predicting that, and so it's just those news-making events that you just got to stay on top of.
Well, let's talk a little bit as a credit trader, because that's primarily what you do, correct? Vertical credits,
yes.
Iron condors. And what the three core trades I would call them on the credit side are bull put, bear call, iron condor. And yes. Is that what you've been trading that since the beginning, right?
Yeah, that's really what I've concentrated on. I've now, the last two earnings cycles, I've been dabbling in playing earnings. So I've done a couple of inverted butterflies, which have gone well. I actually have one right now on Buffalo Wild Wings, which moved way out of my strikes. But now I can't get the damn thing to close.
I was gonna. We should have had this podcast last week.
I know.
2 earnings seasons ago, I had the inverted butterfly on Buffalo Wild Wings, and I think the expected movement was like, I don't know, 10 or 9 or something like that. So I'd sold 5-point spreads, right?
Yeah, that's exactly what I did.
And it moved big time, like 12 points, right? And all of a sudden, like, I'm maxed out profit on Buffalo Wild Wings, right? You cannot make any more money because it's a credit. You know, you're receiving a credit. And I swear to heaven, by the time I was able to unwind that trade, I had not only given back everything that I made, I had actually lost money in the trade. Because it's just, you're going to experience that. You will never trade Buffalo Wild Wings again. And that's the thing about the market is, you could be dead right on your assessment, like you were on Buffalo Wild Wings, and all of a sudden you just, oh my goodness, what are you going to do? Let's talk about that trade. Let me help you with that Buffalo Wild Wings trade real quick.
Great.
Let me pull it up here. Okay, talk to me about what expiration date you have.
I have the August, because that was the nearest expiration to when earnings was.
Okay. And what is your strike prices?
Hang on just a second. I'm pulling up my Thinkorswim here. I just want to make sure I give you the right one.
I'm going to say somewhere around 165, 160s, 170s.
Yeah, I had the 160, 165, 170.
Yep. Okay.
And I have puts, so they're in the money. So I can't let them just expire. If I had, obviously it had.
Well, no. Well, you have the sold strike prices that at 160 and so those are and 170. You can close those individually and just keep the 2 put options for a couple days. So you could roll them out individually. You can buy back the short legs and just keep that directional put options. It's going to be an expensive management though, because they're deep in the money. Well,
that's the thing is I like using the risk graph on the Analyze tab, and that's how I try to experiment with management techniques, on a live trade, because I don't want to just do it and be like, oh no.
You want to see exactly what's going to happen if you take one off, and what's going to happen.
Exactly. So I've been clicking around, figuring out if I leave certain legs on and take certain ones off. But like I said at the beginning, I have a very small account that I'm trading with, and so all of a sudden the buying power effect goes way up past what I could really.
And that's what I was saying. It's going to be an expensive type scenario because you're so far deep in the money. I mean, even how many contracts you're trading, I don't know how many contracts, but let's just say per contract fee. I mean, that's going to be about $3,600. In terms of just keeping the put options. So that it is an expensive management, and right now your margin requirement is about maybe 800 to 1,000.
Yeah, I'm only doing one contract, so one each of the shorts and 2 contracts on the long. And I think my margin requirement is only $500 on it right now.
It's not very much, and that's one of the reasons. And for those of you who are not familiar with the inverted butterfly and earnings positions, earnings is it happens obviously every quarter. Earnings season lasts for about 3.5 weeks. And for a novice trader, it can be one of the most frustrating times out there in the marketplace, just the way things work in the marketplace, just because of the volatility that earnings has, and especially like Milena as a credit trader, that you're not trading a whole lot of credits during earnings season if you don't know how to play earnings. And so what you're kind of doing is evolving into a well-rounded trader, selling your credits and whatnot. But the inverted butterfly is a very conservative trade. It's a 10% ROI in a couple days type trade. Yes, I said 10% ROI in a couple days. If you expect a lot of movement like we got on Buffalo Wild Wings. The only problem is when you deal with a company like Buffalo Wild Wings, the bid-ask spreads are a little wider because it's not as liquid as some of the other strike prices. For example, on the 170, there's no volume. On the 170 strike price, there's 3 contracts. On the 160, you got pretty good on the 165. You got to unwind that before expiration, though.
Yes.
So let's see. So if you unwind it, if you sold the put options that you had, and you kept 2 naked put options in the money, have you tried contacting TOS and having them walk you through how to leg out of this?
Not yet. I hadn't contacted them yet, but that was one of the experimental ways of rolling out of it that I was trying with in the Analyze tab. But I'm not at a high enough level trader in TOS to allow me to have naked put options.
Oh, okay, gotcha. So you can't even unwind it that way.
No. So the only thing I can think of is to unwind them separately, do the 160 and 165 together and then as a vertical, and then the 165, 170 together as a vertical.
Yeah, but you can do that.
I don't really know if that is any better.
Well, no, it is. Your margin requirement isn't going to be as much if you unwind it that way. So you definitely can do this. But honestly, Milena, if at worst comes to worst, contact your broker.
Okay.
Just contact them and say, hey, listen, I'm struggling getting out of this trade. Can you help me? Walk me through exactly the best way. And Thinkorswim's trade desk is really good. They're trade, especially the ones in Chicago. They're a bunch of traders. They're going to help you out in terms of that, and that's what their broker's there for. I know we do a lot of what we do online, and we do it by ourselves. But if you're ever struggling in a trade, and that goes for everybody else out there as well, never be shy about contacting your broker. Talk to a live person; they can help you out as well. Okay.
I think that's going to be my plan.
Awesome.
The most frustrating thing is, I was right.
You're dead right. You were dead right. I mean,
and it's still so tricky to get out of. You think, oh look, max gain, woohoo!
Well, and also,
I want to just click something and cash it in, but that's not how it works.
if you had call sides instead of put sides on this one, it would have been easier. It would have been easier to unwind. If you would have had, if the stock would have gapped up, it would have been easier to unwind. Yeah. And I ran into this exact same issue on what was it the other day? I think it was last week. I can't remember. Was it Green Mountain? I can't even remember now. But it gapped. One was on Netflix, and Netflix had the inverted butterfly on the earnings, and it gapped. It didn't gap. It gapped about in line with the expectation, and I had put options. I had on the put side of it, and so basically what I ended up doing on Netflix is I took a big risk on it, and I shouldn't have done this, but it worked out in the end. So last week, like on Tuesday of last week, I take the naked sides off of it, right? And I just kept those put options. And then on Wednesday of last week, Netflix jumps up like 14 points. And I had put options, deep in the money put options. I got slaughtered. Absolutely slaughtered in the trade. It was but luckily Thursday of last week happens, right? And the market sells off. And so I got a gift of the trading gods basically on Thursday where...
No kidding.
Oh, I got lucky.
Let me ask you this, Matt. When something like that happens, when it goes against you, one of the things I'm working on is knowing when to just be patient and see if it comes back my way, or when to just take the loss and get out.
You know, on most things, like let's take this from outside the inverted butterfly. Let's talk specifically, say, about like credit trades. Okay. Let's just say a standard bull put trade where you're selling a 20 delta, you're selling, 10-15% out of the money. You got 80% probability of success and whatnot. And those numbers are all fantastic. I mean, the bull put spread is a 80% probability of success for a 15 to 20% return monthly on a lot of the stocks that we like trading. But the question always becomes, what happens the 20% of the time it goes in the money? And honestly, it's more like what happens the 30 to 40% of the time that it comes close to the strike price, right?
Right.
And that's where you have to really kind of get to the point of making decisions. And what I like to do is, because it's tough to just close the trade. It's probably one of the hardest things in trading is to take a loss. But if you got a lot of momentum coming down into your strike prices, you got to close the trade. You just have to. And if you want to be a little more aggressive with the trade, you can buy back the short strike, keep the long strike on it as well, and turn it into like a directional option. But you also got to realize you're short term on it, so you only got a couple days before time decay starts to impact it. But for the most part, just close the trade. If it hits, say, 1/2 ATR above the strike price, just get out of the trade, live to fight another day. However, if I'm seeing like a slowing momentum, because we see retracements in stocks all the time, and that's what happens. It comes down in price, and then it goes back up. Well, if I'm starting to see slowing momentum at a support level, I'm not going to close the trade. I'm going to keep the trade. So it really just depends for me on a credit trade what's happening with momentum in the stock. And typically, your candlesticks can help you understand that, narrow body candles and whatnot. But if it ever gets underneath the strike you sold, you got to get out. I mean, you just got to take your lump and say, okay, we're going to fight. We're going to fight for tomorrow. On a directional trade, everything needs to be canned. I mean, literally canned. When you're talking about, say let's buy a call option, right? And I was looking at I was looking at ADM last night. And for those of you who don't know what the ADM is, it is Archer Daniels Midland. And Archer Daniels basically, it's coming down in price. It confirms going back up and it pops up. So basically what I did was I said, okay, I'm going to go out there and I'm going to buy call options on ADM because it's in a good trend. It's at a support level. It's slowed its momentum on the downside, and now it's starting to confirm going back up. So that's kind of my technical signal to get out there and take some action, make some money. Well, so I buy the put.
Did you buy a call option that was in the money or at the money?
Right.
Or?
I typically will do right at the money. Okay. For new traders, I suggest somewhere around a 0.60 delta, and the reason I suggest that just because it's in the money. It's always going to be slightly in the money. You're not tempted to go out there and buy an out of the money option. Well, what I did is basically I looked at which one of the strike prices were most liquid around at the money, and that's the one I purchased. And I think it was, if I had to say right, let me hurry and check. On Archer Daniels, it was a 47 call option, so it was like a 40. I think it was like a 47, 48 delta, something like that. So I buy that now. I'm targeting $51 on it, okay? So I already have an alert placed into the market that if Archer Daniels ever gets to $51, send me a text message, I'm going to close the trade. And 99% of the time, I will close that trade at the target. The stop loss, I placed at, because I don't use like real stop losses in the options market. I actually only use alerts. So I placed my alert right there about $45.50. So if I'm wrong, I'm wrong by a little bit. I lose $1 on the stock. I'll lose, a little bit on the options trade. But it's canned. if those alerts get triggered, send me a text message. If I'm available at the house, I'll log in and close the trade then, or if I'm not, I'll just log into my phone and close the trade. So, that's canned. Directional trading should always be canned. When you're talking about theta trading, which is your credits, it's a little more difficult because of you have to make a decision if it gets close to the strike prices. Does that make sense?
Yeah. No, that makes a lot of sense.
On the earnings positions like the inverted butterflies, those you have to make decisions on the fly, right? You have to make decisions on the fly. So let me give you two examples. The one was we already talked about the one on Netflix last week, and honestly, I think I made the wrong decision, to be perfectly blunt. And what had happened was right before the close on Tuesday, I was just trying to get out of the trade, and I closed off the short legs and held the long puts. I was like, I'll just do it in the morning, and then it really exploded up in the morning. So I was like, oh man, I wanted to shoot myself. But there was another one on CMG, and I had call sides, and CMG gaps up 70 points, max profit. And basically what I did on that is I just closed the individual legs that day because I had max profit and just kept it. The one thing I do like about the inverted butterfly is as a trader, you want options, with all pun intended, right? You want the option to do different things on it. And the inverted butterfly allows you a lot of flexibility on management. But for right now, as you're learning, just close the trade. Try to get out, unless it's Buffalo Wild Wings, and then you can't do that. So don't trade Buffalo Wild Wings. For everybody out there in La La Land, don't trade Buffalo Wild Wings on an earnings position, or ISRG for that matter.
Even though it may look so tempting.
It was sexy, man. I'll tell you that right now.
Yeah.
It was sexy. Believe me, Buffalo Wild Wings. It's a joke that the market maker only had a $5 expectation. That's a joke. But so it's an easy trade, and you did so good on it too. I mean, honestly speaking, when you're looking at that trade setup, you bought the right options, you sold the right options, you analyzed it perfectly, you placed the trade the day before the earnings announcement, you were dead right on your assessment. It gapped much more than the market expected, and so focusing on the positive here, you did everything right. Now the market's going to punish you for trading an illiquid stock.
Yeah, I think I'll just give myself a sticker.
Definitely give yourself a sticker on that one. But I'll tell you this, though. Even just last year when you started this kind of journey in becoming a trader and whatnot, and I'll tell you, it's every now and then when you go around working on workshops, you meet people who you just know you're going to be lifelong friends, right? And that's how I felt about you and David from the moment I met you guys. You guys have so much great energy, just amazing people and whatnot. When it comes to kind of, just that walking out of that though, did you ever expect a year later you're trading inverted butterflies on Buffalo Wild Wings?
Oh my gosh, never in my wildest dreams.
I mean, did you even know this existed?
No. I mean, I was aware, like I have CNBC on sometimes, when I'm bebopping around the house or whatever, and, there occasionally that program Fast Money would come on, and I'd be like, these people are talking gibberish. I don't even know what they're saying.
Yeah.
So talking about the options markets and their trades and all of this stuff. And now I can put on that show and I know what everybody's talking about.
It's amazing, isn't it?
It really is. And I think what was most exciting to me was learning the technical analysis. Because
you had a great teacher.
My husband and I have had investments for a very long time now. We have our portfolio and our retirement and all of that. And I've always tried to read up on the companies that, we have long, investment positions in and all of that. And like all the fundamental analysis, it just wouldn't stick in my head. It's like, gosh, okay, well, this number and that, wait, what does that ratio mean again? And what's the good number if that's the ratio? What is it supposed to be in, in that sector or whatever? But I've always been a very visual learner. So when you introduced to us how to start reading the charts with technical analysis, all of a sudden, everything made so much more sense.
You got three things that really drive markets. You have behavioralisms, and that's just the overall fear and greed in the market. You have fundamental analysis, and you have technical analysis. And the one thing that I've always loved about technical analysis is the fact that I don't have to do fundamental analysis. It's because technical analysis, everything is built into the market,
Yeah.
And
Well, exactly. Like still using the Buffalo Wild Wings example, they reported a great quarter. Like their numbers were amazing, like across the board, but their stock went down 20 points.
Hey, listen, they do make a good spicy chicken sandwich, I'll tell you that. Okay, but yeah, it went down 20 points. And the thing about
so the whole idea that you taught me of, trade what you see, it's like, okay, yeah, they gave a great quarter. Instead of raging against the machine and saying, why isn't this stock up? It doesn't matter.
Well,
It's
honestly,
sold off. And so that's how you got to respond.
I can't tell you how many times in my trading career that I've had somebody, a student or somebody else, send me an email or call me up and just sit there and just bitch and moan about why the stock did this on earnings. They reported great earnings. They're just complaining up a storm. And I'm just like, what do you want me to do about it?
Right.
Do you want me to call somebody? You want me to hold your hand?
Get right on that, Matt. Get right on that.
Yeah, I don't care. And the thing about it is, about the earnings, earnings, you never know what the institutions are going to do. There's times when institutions want to dump a whole lot of the stock, and they just wait for earnings to do it because there's massive liquidity. And it really doesn't even matter what the company reported. So let's say we have, an institution that is an investment in Buffalo Wild Wings. But because of the macroeconomic risk out there, they don't want to put their money in a growth stock like Buffalo, right? They need to reallocate the position, but there's not enough liquidity on a daily basis to do that as quickly as they want. So they plan ahead of time and say, well, we'll just wait for earnings and we'll just dump the stock on earnings. And so earnings comes out, and even though Buffalo Wild Wings reports a fantastic earnings report, they get absolutely slaughtered because, somebody in some aspect of the market just decided to sell the stock then because there's liquidity. And that's what I've always tried to get people to understand is, trading earnings, it's not about the direction of earnings. It's all about volatility, about volatility. And when you look at the different styles of traders, for those of you who are new out there listening to the podcast, you have three main styles of traders. You have Vega traders, volatility traders. You have theta traders, which that's what Milena primarily is, and now you're becoming a little bit of a volatility trader as well. And then you have delta traders. Delta means direction, Vega means volatility, theta means time, or selling options for cash flow, basically. Earnings is all about volatility, buying volatility as it rises before the earnings and selling volatility like we like doing on the inverted butterfly after earnings. And that's what it's all about. And so there is no real, determination of the direction of a stock on earnings. It is a 100% crapshoot, 100%. I want to shift topics real quick, Milena. I want to talk about you, because you and David fascinate me. You're in an area of the world that is like literally unknown for me. Like you will start talking and it's like I don't understand what you're talking about. And I'll tell you right now, you got a new show, right? Finding Carter. Yes. It's on MTV. How can we all get a hold of that? What do we need to do?
Well, yeah, I'm an actress and also a musician and a singer and all of that. And so the idea of like the fact that I trade options during the day or in my downtime, most of the people I encounter in my world, they think I have three heads. So I just don't really even bring it up to most people in the entertainment industry. Because just like you're confused by what we do, the people in my world are baffled by what you do.
Oh, I want to, like, whenever somebody here finds out that you trade options, and even if you said the word inverted butterfly, what would somebody from your world say to that? I mean, what would they even think?
They don't even know what to say. They just kind of look at me. They're like, oh. That's kind of about it.
Good for you.
Occasionally I'll run into somebody who will say, oh yeah, my dad did that a bunch of years ago. He did that a little bit. Or and then like, occasionally...
Not the same. It's not the same.
No. And then occasionally I'll meet somebody who, is in more of the financial world or whatever. And if I happen to mention it, they just look at me and they get this twinkle in their eye. Like, they can't believe what I'm saying.
Yeah. Yeah. They got this amazing actress, singers, everything you've done in Hollywood and whatnot, and you're sitting there talking about how volatility crushes on earnings, and you're going to trade in inverted butterfly.
Yeah, my earnings play on Netflix.
Yeah, exactly. It's awesome.
So that is really fun, and so as far as my day job, which is my real career, on acting, I am currently a lead on a new series called Finding Carter on MTV. We air Tuesday nights at 10 p.m.
There you go. That's how you find her, everybody.
Central. You can go to mtv.com and watch some of the episodes that have already aired. We premiered at the beginning of July, and we have 12 episodes, and if all goes well, we'll get another season. But the show follows a 16-year-old girl who's grown up all of her life with a single mom, and
which is you, correct?
Best friends, yes.
Okay.
They're best friends, and they're very happy. And then the girl discovers that she was actually abducted when she was 3 years old.
By
so the
you?
Mom that she's always loved is actually her kidnapper.
Ooh.
And she gets sent back to live with her biological family that she's never even heard of or met. And the underlying question of the show is, will this young girl, Carter, ever become happy and assimilated into her biological family, or will she escape back to the mom she's always known?
Yeah, I watched the first episode of it, and it's very, very well done. Great job.
Oh, thank you.
Love the show. Everybody go out there and watch it. And,
and by the way, I play the baby snatcher.
Yes, you do. Yes, yes, you are the stiller of the baby when she was. Why would you still a baby when she's 3? I want to know this. What is your motivation behind stilling this baby in this show?
I think you might just have to watch the series to find out.
Oh, you're gonna make cliffhanger. There you go. I like it. So I will find out what your motivation is behind this.
Eventually, yes.
Eventually, okay.
There are clues that get peppered into all the episodes, and people will, we're hoping the audience starts kind of putting the pieces together, but, whatever you think happened, you're probably going to be wrong, because it's a really extraordinary circumstance.
So good. It's well written then.
Yes.
Well written.
Oh, yes.
Good, good. When are you going to find out if you get picked up for season 2?
Well, I don't know. It's as much of a crapshoot as earnings announcements.
Oh, wow.
I'll tell you that.
You should though. You should though. It has good ratings, correct? And it's
we're doing well so far. We've been trending on Twitter because our audience base is kind of that young teenage market, and so they're very engaged on social media, which has been really cool and fun and bizarre.
What percentage of 16-year-old girls that watch your show wish that you would have kidnapped them at 3 years old?
Well, you should look at my Twitter feed, because I have girls writing to me at least once a day saying, "Will you kidnap me? You're so awesome. I want you to abduct me."
That is so disturbing in our society. It really is disturbing. It goes to show that you're an amazing actress, though. I mean,
well, thank you.
There you go. Real quick, how do people find you on Twitter?
I'm at Milena Govich, MilenaGovich.
There you go.
And the show is called Finding Carter, so you can hashtag Finding Carter and read all about what's going on with that. I also have a Facebook page that's, again, Milena Govich. And if you Google that, you will find it.
Gotcha.
And feel free to write to me or tweet me or whatever. We can talk about acting, we can talk about music, or we can talk about trading.
Trading, definitely trading. Definitely. Let's kind of walk me through just kind of how you got your start in all of this. I've always been fascinated by it. And by the way, you are an amazing singer. Okay.
Oh, thank you.
Yes. And so kind of talk to me about how you got your start in. I mean, how do you even get started in Hollywood? How does this work?
Well, I come from a musical family. Both of my parents were music professors, teaching opera and musical theater, singing. And I went to New York. I bought a one-way plane ticket from Oklahoma City to New York with 2 suitcases 2 weeks after I graduated from college, and my violin on my back, and moved to the big city.
You're a cliche, you know that?
I know, I know. I'm doing my best to
The
fulfill all the
homegrown
cliches.
Oklahoma girl with the this guitar on the back, two suitcases to New York. Literally, I think that's a cliche, right?
It really is. It
Yeah.
really is.
Okay. But it worked
Um,
out. It worked out.
it worked out quite well for me. I sang and danced on Broadway for 5 years, and a lot, Then after that, I went on to work for 5 years in television in New York. If any of you out there have insomnia, you can see me on reruns of Law and Order all the time. I was the only female detective ever on the original Law and Order series.
We're talking about the original one.
Yes,
Okay,
not
the best one, not the 19
not the other
different.
ones, not the
Gotcha.
spin-offs, the
Okay.
original series. Yeah.
What years were you on there?
I did. I'm trying to think. I think it was 2006 and seven.
Was it is the what is the DA's name? Is that Waterson?
Yeah, Sam Watterson.
Waterson, yeah. Was he the DA when you were there?
Yes, he was.
He
I
was
didn't have a lot
awesome.
of scenes with him because I was on the police side of it.
Uh-huh.
So all my scenes were with Jesse Martin, was the other detective
Okay.
that I was partnered with. But yeah, basically, the way to survive in the entertainment industry is discipline and perseverance. There's so much of what I do in my current career that translates to trading. You have to be willing to take risk, and you have to be willing to believe in yourself that you can accomplish things, that you can achieve what you set out to achieve. And the amount of rejection that I get on a daily basis, whether I have a job or I'm trying to get a job, it's massive. I think most people don't quite realize. You see people on TV or you see them on billboards or on the red carpet and you go, wow, it's such a glamorous life. There are certainly moments of glamour, that is for sure. But that's a very tiny percentage of the effort that goes into having a career.
Everything behind the scenes and doing all the auditions and
Yeah, and
everybody in their
all
dog
the
fighting
material
for those
that you have to
roles.
learn
Yeah.
and perform that you never get hired for the job, but you have to put in just as much work as if you were hired for the job.
Yeah.
But then you don't get to do it and you don't get paid for it. So moving on.
Yeah.
But really, it's setting up a discipline. Like I still take acting class to this day. I've been a professional working actor for 15 years, and I finished shooting Finding Carter on Wednesday night. I wrapped the season finale. I flew home Thursday. On Saturday, I was back in acting class.
Really?
Yes.
Oh, wow.
And the discipline of staying in good physical shape, working out, eating well. That's a daily task, whether I'm currently shooting something or not. So I basically just have taken trading and just added that to the list of the daily disciplines.
Honestly, I think what you're describing is what it takes to make it in any profession. Honestly,
It's true. Yeah.
It's like, and that's one of the things that drives me crazy as I travel. A lot of people just want to give it to them, and you got to. Success truly is a choice, but it's the choice, and then you have to work the rest of your life to earn it. And kind of coming up from Oklahoma, going to New York, taking the chance, seeing your vision, seeing your dream, and getting out there, working on Broadway for years, and getting in, becoming an actress and whatnot. I mean, that's a testament to your hard work, and the success comes from it. And I'll tell you, as a trader, we're certainly going to have our ups and downs, right? You know that as well as I do. And it's how you respond to the down moments. You can, because the one thing that I've always thought is, what else am I going to do? Am I not going to trade? What else? Am I going to put my money in cash and put it in a piggy bank and let it devalue and inflate away? No, I mean, you got to get through it. You got to learn from it, and you're going to get better and better and better. And this is a skill set that you'll have your entire life. Literally, I mean, you'll be able to, when you and David are rocking on your front porch 45 years from now, you'll be able to right-click and sell something.
Yeah, well, exactly. And one other thing that I love about trading is that you're taking back control. It's not just like putting your money in some account and hoping that it's still there when you want to withdraw 10 years from now or whenever you retire or whatever. Because truly, and I hope this isn't getting too philosophical, but I believe the only real commodity that anybody really has is themselves. Mm-hmm. And if you can work on yourself and develop yourself into the person or the into the career that you want to have, then that's the biggest asset that you can mine. And to just trust yourself that even when in the down days, you're like, no, I'm capable. Mm-hmm. I know that I can work hard and I can achieve, even if this is a down day, or, I was up for a big TV role and I didn't get it. You just have to keep going forward knowing, okay, well, eventually I'm going to be the girl that they choose, or eventually I'm going to get good enough at these trades that I'll be able to manage it in the best possible way. It's really just having faith in yourself.
I don't think that's too philosophical. I mean, Warren Buffett, one of the greatest investors of all time, he came out and said a few years back, he said, you know what, they can run up huge deficits, they can inflate the dollar away, they can, do all these kind of things like quantitative easing, and unemployment can get worse and the market can tank. But if you have talent yourself and you have a wonderful asset, that's exactly what you just said, in terms of your number one commodity is your knowledge, is you. And, we don't work on ourselves from a knowledge basis enough, especially from a financial market standpoint. We get into this system, 401k system, and we get into it very early on in our careers, and we don't even have the knowledge to question it. And I'm going to tell you guys right now, trading is the easy part. Teaching people how to trade is really the easy part. I mean, even you came out of the gates selling credit spreads. I mean, out of the gates. I mean, you weren't even like, hey, I'm gonna go try to buy a stock, make it easy. You're like, nope, right? Matt says right click sell. Let's go sell some credits. Yeah. Teaching people how to trade is easy. It takes time. It certainly takes time because you need multiple market cycles. But the hardest part of being an educator is basically convincing people that they are talented enough that they can do this. And it's not that hard. And, I was even, in every one of my workshops, I tell them that up front. I said, you know what, if I could get you guys just to accept the fact that you could trade, then we would have an easier time teaching you how to do it. But the massive majority of what I'm going to have to do is convincing you that you can actually do this. And I know for a fact, I've seen it in you, I've seen it in me, Tim, everybody here at Trading Justice. It's just something, once you get the bug, once you get the passion, it's easy. It doesn't mean you always make money. That's not what it means. It's just easy. It's easy to get out there and do
also don't beat yourself up when you do have those losses. I've gone through that too, where it's, I try to manage a trade in a certain way, and I'm like, God, that was so stupid. How could you be so stupid? Didn't you see it was about to do this or that? And to just drop that, because it's not helpful. Mm-hmm. It's just not helpful.
Well, have you ever been in a trade and it's going against you, and you just stare at it every single day, and you're just go up.
Oh yeah, just mad about it. Yeah, just looking at the screen and just mad about it.
Just staring at it. But then the moment you decide, I'm out, I'm done, I'm going to close the trade, you don't even think about it. I mean, it's like out of sight, out of mind, and you just get to move on, and you get to go out there and find something else to, sell or buy.
I have most definitely had that experience. Yeah.
It's an experience. Like, I think, what was my last one I had it on? Oh, I can't even remember. It might have been Netflix as well. I trade Netflix. Like, I do the same thing on Netflix every single earnings season. I always do it. I always keep the put options. What was it? Oh, I can't even remember what the stock was. But it was like the whole portfolio was doing great, except one trade. And I was losing so much money on that one trade that it was not even... I wasn't making any money at all. It was offsetting like 15 other trades out there in the portfolio. That's how bad it was. What happened was... I set, how I use alerts, I don't use stops. I set alert, and I got alerted, but I wasn't around. Okay, like some bad news came out on stock, and it was in a credit spread, and it just kept going down, and it was like max loss, and it was, here it was. I know exactly what it was. It was ISRG. It was a year ago. And they pre-announced earnings, okay? And so 3 weeks before their earnings date, they pre-announced it. I had an Iron Condor on. It gaps down 50 points on me.
Oh, my God.
Okay, completely, like, it's 20 points under what I had sold and bought. Nothing I can do about it. It was so bad. The liquidity and the bid-ask spread was so wide. I had shown a bigger loss than what is theoretically possible. Okay? Because you can only lose the difference between the strikes, right?
Yeah.
And no. They decided to like do that by 1.5 times my theoretical risk. And so like I was down thousands and thousands of dollars in this trade. And I'm sitting there and it doesn't expire for 4 weeks. Okay? So I had to stare at that for 4 straight weeks because I thought to myself, it's already bad enough. You might as well just see if earnings can get it back up, right?
Yeah.
Oh no. Gaps down even more on earnings. And I'm just sitting there just staring at this trade, just thinking to myself, I swear to God, I am never going to trade ISRG again. Never. And you know what? I never have and I never will. Because it's not just me that upsets other traders too. When you come out and pre-announce an earnings and we have condors and credit trades and we're dealing with probability analysis, nobody's going to trade your stock. Nobody will. Okay, mm-hmm. And you know, good for ISRG. They've been in a bearish downtrend ever since.
That serves them right.
It does serve them right. It absolutely does. But you got to stare at it the whole time, and I just stared at it, and I didn't really do anything wrong on the trade. But at the same time, it's just like, oh man, look at that ISR. Look at that big negative number on a daily basis.
Yeah.
And I couldn't even focus on the things that I was doing right. So, out of sight, out of mind. Once that got out of there, got right back to doing what I need to do. Let's talk, let's see, what were you in just recently? It was the play, right?
Oh, yeah.
We got to talk about that. It was one of my favorite experiences of all time.
Yeah. I perform here in LA. I've now lived in LA for about 4 years, and I perform with a group of people who are all former Broadway performers who now live in LA and kind of do what I do. You know, we do film and TV, but we all still love to sing and dance. So I work with a group, and our series is called For the Record, and we take the soundtracks of a specific film director's movies, and we sing the songs with a live 4-piece band, and we have scenes from the movies as connective material between the songs. So we're in character the whole time. So we're singing the songs from the soundtrack as the characters from the movies. And the one that you saw, Matt, and actually Gino came
Gino
too.
Was there. So was Noah. Gino and Noah were there.
Yeah. And Noah, yes. And that was a Baz Luhrmann show. So we performed material from Moulin Rouge, Romeo and Juliet, The Great Gatsby, and Strictly Ballroom. And I was performing the Nicole Kidman part from Moulin Rouge.
Which is the best part, by the way.
I think so.
I mean, amazing. I'll tell you right now, it was like kind of a dinner play, and we were sitting, Noah, Gino, and myself were sitting right there on the main stage, right there in the middle of everything, and I just thought you guys were just absolutely awesome. It was one of the most entertaining things I have ever done. Okay, and how you kind of,
you guys all have to come if you're in LA.
Oh, definitely.
Right now, the currently running show is Quentin Tarantino.
Oh, you're kidding me.
Yeah. Oh, it's great.
Seriously?
And I'm not in this particular one because I was
in LA 2 weeks ago.
My TV show. So I haven't been able to participate in this one, but it's going to be running in LA through the end of August.
So you're taking Tarantino, and what films are you in?
In Tarantino, it's Reservoir Dogs, Pulp Fiction, Kill Bill, True Romance, and Django. Oh, and Inglourious Bastards.
Oh, wow.
Yeah.
All of them are top 10 movies except Kill Bill. I just don't get it. I know what he was trying to do, and I wish Tim was on here because we could argue about this. And he said he might be logging in, so we might have to save the discussion until he logs in here. But he thinks it's one of the best movies of all time. I hate the movie. I can't stand it. And I love Tarantino. I mean, he's one of the best directors out there. I just don't get the movie.
He has, in fact, attended the show, I think, 4 times now.
Oh, you're kidding.
This summer? Yeah. He loves it.
Oh, I guarantee it's off the chain. I guarantee it's amazing.
Yeah.
I mean, what songs?
Oh, there's a lot. I'm not in that show, so I don't remember exactly what all the songs are. But I know Down in Mexico and like Satisfied Mind is one, and Jackie Brown, the movie Jackie Brown has a ton of great songs in it.
I'm sure it could not be as good as the Boz one. It just can't. I mean,
well, we might be bringing the Baz Luhrmann show back for the holidays. I've heard a rumor about that. So,
well, we are talking about
anybody who's in the Los Angeles area. You can follow me on Twitter and Facebook, and I always post when new shows are coming up and the dates and all the ticket information and everything.
Moulin Rouge is perhaps my favorite movie of all time. I'm not shy about it, not in any capacity. I've cried many times watching the show. They're back in the day when that show came out. Guarantee I had like 3 different CDs for it.
Oh, I love it.
You know, there's me and my buddy Frankie. He teaches here at Rich Dad as well. We used to sing the songs. We were show tunes, man. You would never know that. You would never know that.
I love it.
Oh, I love that movie.
You're a closet show tune boy.
Hey, listen, I am from Emory County, Utah, where you drive trucks and you have guns and you like things like Reservoir Dogs, not Moulin Rouge. Right. But I'll tell you, I love that show. Ewan McGregor in it, amazing. Kidman, amazing. What's my favorite character though? The Duke.
Oh, yeah.
Gotta love the Duke. He's so dirty. He's just so dirty.
Right.
Just a dirty, dirty man. Yeah, but so the new one's coming here. Let me bring Tim on here real quick.
Matty.
T, are you there?
Hey, what's up?
T, you're on the podcast. Milena, are you
there?
I'm
right in, huh?
That's how we do things.
I like it.
Hi, Tim.
Hi, how are you?
I'm great. It's so nice to finally meet you.
Well, kind of. I don't even know who I'm talking to, so I am assuming it's nice to meet you.
I am not cutting that out of the podcast, by the way. Yes, I sent you a text on this. Do you not?
Well, no, I saw the name, but I've never met. What's your name again?
Milena.
Milena.
There you go.
Nice to meet you as well. So what are we talking about so far?
We're talking about Kill Bill and how horrible of a movie it is.
Why would you ever say that? That movie's awesome. The music in Tarantino movies are just fluid throughout.
Hold on.
It always has its own stamp. I love the music. And I honestly think what this is, Milena, is Matt is afraid of strong women.
That's not true. That's the dumbest thing I've ever heard in my life. There's not. What are you talking about?
I know you've known that a lot longer than me, but I'm not really buying that so much.
That's just not true.
It's not true either, but I do like giving him a hard time. I love that movie, Matt. You know I do. We differ on that one.
I got to tell you something. Milena's what's the production company you work with for all this?
The series is called For the Record.
For the Record, and you got to tell Tim what's going on with Tarantino down in L.A.
Yes. So to not repeat myself too much, I perform with a group of people who we basically set the movies. The music of the movies into live theater. So currently the group I work with is doing a Tarantino show where we perform the songs with a live 4-piece band and we sing them in character from the movies.
And it's like a dinner play, right?
What?
It's like a dinner play where you go down, you eat some dinner.
There's drinks and food
it's awesome.
And everything.
We went
the whole night.
Well, Tim, you remember me talking to you about the one I went when I was in LA? I think it had to be at least 6 months ago, right?
Yeah.
6 months ago. Yeah, and I told you I went to this play and it was the Boz play and it had Moulin Rouge and Romeo and Juliet and all those songs and whatnot. That's the same production company that is doing the one with Tarantino now, and I guess it's amazing.
So is there a theater production with the songs? There's like a story throughout, or do they just kind of have...
We perform snippets of iconic scenes from the movies as the connective tissue between the songs. So
sure.
You get context for all the songs from the characers. So it's really cool.
If you need a John Travolta double for the dancing scene out of Pulp Fiction, I'm all over it.
I'm making a note of that. Thank you.
He's my favorite director, by the way. So I could talk about Tarantino forever. I know he's got a project going on with Rodriguez right now, where they launched that new channel.
Yeah.
It's kind of a I can't remember the name of the channel, but
it's I don't know what the name is, but they have the show. They're doing a TV version of From Dusk to Dawn.
Yeah,
Yeah,
exactly.
Have you seen it?
No, I don't know how you could recreate Salma Hayek's character. That'd be a hard role to fill.
Wow, you're right. The snake scene in that one, pretty nice, very nice. But I'm only like 3 episodes into it. You know, I watch pretty much every TV show in the history of mankind. But it's decent. Their characters are decent.
Yeah. I'll have to check it out. Well, I mean, I don't care what we talk about. We could talk about Tarantino all day. If you guys want. I didn't want to interrupt whatever you were talking about, though.
Oh, that's what we were talking about.
Yeah.
Oh, yeah?
Literally.
My favorite song from any of his shows, obviously, is that Steelers Wheel one, Stuck in the Middle from Reservoir Dogs. That's the most iconic one.
Yeah, that's in there.
Awesome.
You're sold.
I like it.
Next time I go to L.A., Tim, you got to come with me. We'll go.
I will, yeah.
I'll bet you I go back down. I should have got up with you last 3 weeks ago I was down there?
Yeah, well, I was in Atlanta.
Oh, yeah.
So,
you got to tell people about the picture you took.
Okay, I'll tell.
Yes.
So the TV show that I've been filming, we actually shoot in Atlanta, and the hotel not too far, the hotel I'm staying in was not too far from the Atlanta Fed, the Federal Reserve Building. So I, at one point when I was walking by there, I took a selfie in front of the Federal Reserve Building with maybe not such a generous pose.
There's some vulgarity, I would say. Maybe, a couple birds in the air flying around.
There may have been some, some birds.
It was a great selfie, though. She's standing there in front of some statue of the Atlanta Central Bank, and she's giving it the bird. And I sent
that to you, Matt. I don't want you posting that anywhere.
That's getting posted everywhere. No, I'm kidding. But I will tell you this. Awesome selfie. And I am not, I think one of the worst things in our society today is the completely unadulterated version of the selfie. It is way too much out there in society today. I can't stand Facebook because of the selfies. However, that was a selfie worth being proud of.
I knew you would like it.
I was.
Well, I got 2 reactions to this. Number one, selfies are going to get worse, Matt. I was reading online the other day.
Can't stand them.
You can get like a drone selfie.
What?
Where a company has like this little drone, like you've seen like the Amazon commercials where they deliver packages with the drones. It'll come and find you and take pictures of you.
Are you kidding me?
How creepy is that?
But
the Fed thing. There's a Federal Reserve building here in Salt Lake, which is very unassuming. You wouldn't even know it was the Fed if you didn't literally walk by it, stop, and read the sign.
Well, the only thing you would know is it has a lot of barriers around it.
Oh, yeah, they're not shy about that.
Yeah, a lot of barriers.
Yeah, it's a government building if you know what to keep an eye out for that kind of thing. But I walked in there once, and I asked the security guard who's got a gun on his hip, I said, hey, do you guys sell T-shirts here? He looked at me. It was the funniest conversation. He actually went and found somebody to ask if they actually did sell T-shirts. I don't think he knew how to respond.
Dude, I could see walking in right there with you and your hippie little self and just nonchalant. Hey, you sell T-shirts?
Yeah. Yeah, the Fed. I didn't do the whole selfie with the birds flying around. I think I know what you guys mean by that. I'll have to see this picture.
Yeah, it's a great picture.
Yeah, that is fun. They're fun to mess with. The Federal Reserve's in the news lately, obviously. I mean, that's what everything in the market. Matt, I had a question in lab today. I teach my labs on Mondays. And one of the students, he's a real bright kid. He's new to trading. He listens to the podcast. He asked me, Tim, I can't figure this out. I was reading the news last week, and everything sounded good.
Oh.
Why did the market go down when the news was good?
Tell me to go watch my video.
How would you educate a new trader on that whole idea?
What I would say is ever since 1950, there's been no direct correlation between the health of an economy and the market direction. That's number one. Number two is a healthy, and this we were talking about this, Milena. where being able to see multiple market cycles kind of gives you a little bit of a perspective on what happens, what drives the market. Well, last week, it wasn't just the Fed. The Fed did what we expected, right? The Fed curtailed again $10 billion. They said what they said. There wasn't really any indication of anything crazy out there. But it was the other things out there. Manufacturing data went up. Consumer confidence ticked up. You had the GDP report, which was an absolute, just ridiculous home run last week. And all of this was showing you that the economy is growing a little bit, and things are getting a little bit better, despite unemployment dropping to 6.2. So we had a real good week economically last week. But what that means is that the Fed has to raise interest rates before they want to. And the number one thing in the market right now is not the health of the economy; it's what the Fed is going to do, and especially in terms of and it's not even quantitative easing anymore. People know what's going to happen with QE. They're going to be out of the market in October. It's the open question is, how do they unwind the 4.7 trillion, and when do they raise interest rates? When they raise interest rates, money's going to be sucked out of the market, and that's where a lot of us are expecting some downward movement. So when we saw the good economic reports out there and the market went down on it, for a new trader, you're like, what? Wait, whoa, the economy's getting better and the market tanks? Well, yeah, because number one, there's no correlation between the health of the economy and the market. And number two, it means the Fed has to act beforehand, which will suck the money out of the market.
So, Milena, when you hear Matt use all those verbose words and act like he's sounding smart, does that just turn your brain off, or does it get you interested?
No, I'm actually pretty excited because of all the work that I've done the last year. I actually understand what he's talking about.
Boom, done.
I like
tried to set me up, buddy.
I always wondered. I was being sarcastic. I'm kind of in one of those moods to give Matt a hard time today, but I worry, like as a teacher, Matt. We talked about this before. Is that sometimes we assume the audience knows what we're talking about? Mm-hmm. I agree with your logic. I think you're hitting it right on the head. But you may want to slow that back a little bit. I'm going to have you rephrase that in one or two sentences, like you were talking to Grandma Esther about the economy.
Okay, Grandma Esther, if the Fed raises interest rates, you will lose all your money.
She already kept it under a mattress forever, so
that's true. Well, you said Grandma Esther, She probably didn't even know what the Fed was, man.
No. Just call it like big government or something.
Yeah, government, grandma. Knowing our grandma, she would have said a few words that you can't say in 2014 any longer.
Yeah, so. That's true.
Yeah, she was not. She was a fighting woman, Milena, from the 1930s. Grew up through the Great Depression, and she. I don't even know how to say it. She was an ornery old lady, hardworking, principled, that just liked white people.
It's not true. Don't say mean things about my Grabs. Just because she liked me more than you doesn't mean that you can
what are you
do that.
She hated me.
First of all, anybody who knew you under the age of 16 knew that you needed to get smacked around a little bit.
I'm not even going to touch that. I think that's wrong. I was a good kid.
Yeah, all right. Milena, this is like therapy hour now. I don't know if you have a degree in psychology, but the brothers are going to get down to it here.
Yeah, well, I have brothers myself, so this is all old hat for me.
Yeah, this is how we get down. Tim, just kind of talk to you about what kind of trader Milena is. She was in my workshop last summer. It was early last summer. Her and her husband David. And they came through Master Trader, and I don't know if you did cash flow options or spread trader.
Spread trader.
Yeah, I think it was spread trader. I think you skipped cash flow, and it was a good decision. But she basically out of the gates, and I'm not kidding, she just starts selling credit spreads, and that's all she likes to trade is credit spreads. And now she's trying to work on really kind of learning how to trade in earnings. Trading the volatility coming out. She's been practicing some inverted butterflies and whatnot. What type of advice, as she's just now getting used to trading earnings, and she's, have you traded any other strategies besides the inverted butterfly?
No, just that, and occasionally I've done a couple of iron condors on earnings that have worked out pretty well. So
I'm a fan of it. I'm a fan of the condor if we expect no movement on the earnings because we can get a huge premium on it. Tim, what advice would you give to a trader that is approaching earnings the right way?
Interesting question. Earnings have been a central part of my own trading for so long, because whether you're avoiding them or you're embracing them, obviously, I mean, they're there. Earnings season is 25% of the market year. You have to be aware of where it is, where your company's earnings date is. And I love what I love what you're doing. You're embracing it. You're saying, bring it on. Let's trade it. I think that's the right approach one way or the other, whether it's a condor or a butterfly, or you trade the gap after the earnings day. I had a good friend, he's still my friend, Sam Miller, Matt, and one of Sam's favorite things to do is to trade after the earnings day. So like it'll gap up or down, and then he'll put his credit spread on the day after. He just prefers to avoid the volatility risk. But that's just a different style.
On a lot of those stocks, you can still get a wonderful credit even after the crush.
Especially if you're doing it within the first hour and a half of that next morning, when the volatility is still settling in and there's a lot of action going on. So you kind of have to jump on it. I found by noon or the afternoon, it tends to have come out quite a bit more than in the morning. But that's maybe a strategy for a different conversation. I would say in terms of advice, become enamored with the risk graph. Because there's so many subtle things that even with training you won't be prepared to deal with as they change in the market. I'll give you an example of this. Like in one market condition, you might be using 20 delta options with strike prices and expirations that are 45 to 75 days out. And that might work and work and work and work for like a year straight. And then all of a sudden it just feels like it's not working as well anymore. Well, an experienced trader will start doing a lot of practicing and modeling through the risk graph using 90-day options and 7-day options. And you'll start to try to compare and contrast different ways to build the same strategy and take advantage of a new potential market condition. The markets do adjust slightly. And even that subtle little thing where in one market, the best way to trade might be with weeklies. In another market, it might be better to go out 60 or 90 days. And it's hard to know that unless you're constantly examining the numbers behind these trades and the implied volatility on the independent expiration chains. It took me years to get there, by the way. So you've been trading for about a year now, Milena? Is that what I heard?
Yeah, just under a year. I started doing a live account last September. But that's really great advice, Tim. I've already, even in just the short time that I've been doing this, I've already noticed that in my credit spreads, this summer the volatility has been so low in general. Credits that I was getting even 6 months ago, they're not quite as juicy at the same 20 delta that I'm looking at. It's like, well, I used to be getting a solid 20% ROI, and now it's more like 18 or 17, and what do I do about that, and how do I adjust, because the market conditions are just different.
Yeah, well, I'll tell you, sometimes it changes and it doesn't come back, even though we want it to. I remember when, after the market crashed, when the implied volatility in the market was averaging between 20 and 40, not like lately where it's between 10 and 18, you could get ROIs that we couldn't sniff at right now. There's no way. Mm-hmm. So in 2009, even into 2010, you could get some ROI numbers that were just inherently built into that market. There's no way you could get that now. And this actually brings up a very interesting thing that happens, Matt, from a teacher standpoint. And most of the people out there listening to the podcast, have either had you or I in some form or fashion as a teacher. So guys, I want to share some insight. The rules I might have wrote down for a strategy 4 or 5 years ago, they've probably changed. So as a student, your job is not just to memorize the structure of how to do something, but the logic behind why it was built that way to begin with.
Yeah. And also, the things that we're doing now today, they're just different. And yeah, when volatility is low like that for a credit trader, yeah, I feel so bad for you that you're only getting 17% ROIs instead of 20. Wow. My heart, I'm just weeping over here. Feeling
It's
so
tough.
sad.
It's tough, gotta say.
Oh, how are you going to pay the bills? I just wow.
I got to keep acting, man. I just got to keep acting.
Yeah.
Well, I bring it up because
instead
I've
of getting
this.
too far into details, Matt, I actually would love to hear a little bit about Milena's experience being new at all this stuff. I mean, a lot of people are challenged with the time commitment, the routine. Have you been able to kind of absorb that and build it into your life and your schedule, Milena?
Yeah.
Or
We talked a little bit about this earlier, that I already have a pretty disciplined daily schedule just for my acting career and for my performing. And, growing up as a musician, I play the violin and the piano, and what you have to play your scales every day. Or, dance, you have to do your warm-ups every day. So I just have kind of lobbed the trading routine in with the rest, so it was actually pretty easy for me to assimilate. However, the tricky thing is knowing or just recognizing when I have the time to commit to it and when I don't. And last week we had Netflix and Chipotle earnings on the same day, and those are two really great ones to try to trade. Well, the next morning I had to be on set. My pickup was 5 a.m. to be on set at 6 a.m. and I had this really intense 6-page scene that we were going to be shooting for the whole first part of the day, and I knew that there's no way I could pay attention to trades. And so to just have the discipline to say, okay, even though you only get this a couple times a year, you got to let Netflix and Chipotle go this time. You can't put on a trade if you can't really watch it the next day. And
especially
I wasn't mad about it, but it's that's something that you learn, and I think lots of people deal with that in their lives and their other careers.
Well, I want to say something off what you just said, because I think it's so important. When you're trading earnings-based strategies, if you can't be there to manage the trade the next day, you don't do it. You have some perspective. You say, okay, live to fight another day. There's only 500 different earnings reports this earnings season that we can trade, and we'll hit Netflix and CMG next time.
Yeah, I had to do it. I had to sit myself down and have a conversation and say, just let it go.
Yeah, just
focus on your big huge scene tomorrow.
Well, I mean, yeah, priorities, because on Netflix and CMG, you would have had to be there to manage the trade in the morning.
Yeah.
You have to. I mean, you're trading one of the most aggressive volatility trades out there, and you got to be there to manage it. And if you can't, that's fine. Go do your scenes, focus on that, and then come out and trade Buffalo Wild Wings, which you'll never do again.
Well, I'll tell you, the fact that you're bringing this up after a year of trading just shows that you're going to be great at this stuff. Because some of the most important things I've had to learn about myself, I started trading pretty young. My first year in the market, I was 25 years old, right out of college. And I still had to learn to not trade like when I was sick or stressed, or if I was going on vacation, little things. Mm-hmm. You can't be there all the time. And I know that some of the worst periods of trading, Matt, in my history have been like I had the flu or something. And I had no business worrying about day trading the futures market that day. I should have been in bed. Mm-hmm. But, at that time, I just thought I should just get back to work or whatever it was. And I've learned over the years to kind of keep an eye on myself with that. A lot of new traders have a hard time with that, or even finding the time, their schedule to make it more consistent.
Well, kind of just my experience with that, because I same way. You and I came up through this together and whatnot. And when you first start doing it, it's like, oh, I got to do this today and I got to do that tomorrow. And no, you got to live your life. I remember I was day trading currencies, and I like trading the euro dollar open, which is about 1 a.m. our time. And I'm kind of a night owl as it is, so I'd trade it and then I'd manage it and try to make some money on, technical analysis and whatnot. And I was talking to Keith King one time, who's a mentor for Rich Dad, and Keith says, "What in the world is wrong with you? Put the trade on, put a stop loss in, go to bed." Mm-hmm. And that's where we came up with the go to bed trade. But it's perspective. It's the reason why we trade is so that we have more time with our life. so that we can enjoy the fruits of our life, so to speak. So, if you're not, you don't have to hit everything, because you're not going to ever do that.
Mm-hmm.
All right. What advice would you give to somebody just starting out?
First of all, I just got to say this. My favorite moment in our entire podcast that we've ever done, and I was doing a dead count in my brain, Matt, of how much dead air you were going to allow to have happen.
It wasn't going to be much, I'll tell you that right now.
It makes you so nervous, it makes me happy.
No, it doesn't make me nervous. It's just like awkward silence. Nobody likes awkward silence.
I love awkward silence.
That's because you're awkward. I get this. Okay, but that doesn't mean the people who are listening to the podcast don't want to listen to us talk. Maybe they actually do.
What was the question?
The question is this. A year into this now, you've been trading fairly actively since last September, October. So you're about a year into this. What advice would you give somebody who's just starting this journey and is struggling with some of the basic concepts?
Well, some advice that you gave me, I'll just repeat it, is to be really clear on what your trading rules are for yourself. Mm-hmm. Because especially if you start to get confused or you're not sure quite how to manage something, or you get frustrated, I actually turn to David, my husband, quite often, and I'll just be venting. I'll be like, I can't believe this, and he'll say, are you following your rules? Mm-hmm. And I'll say, yes, but it didn't work out. He's like, well, then you're doing it. It's like, okay, I'm following the rules. And to just keep coming back to that, and make a commitment to it. Mm-hmm. Whatever that is, whether it's a daily commitment or a weekly commitment, and really focus on finding out what's the right kind of, well, for lack of a better term, the right trading lifestyle for you. Mm-hmm. Because not everybody's going to be the same, and not everybody has the same amount of time or mental bandwidth to dedicate, but figure out what you can dedicate and then go with that and stick to it. Don't waver from it. Just be disciplined and keep trucking forward.
Love it. Tim, what about you? What advice would you give?
For a new trader in their first year?
Let's say a new trader. Let's change it a little bit. A new trader, first couple months, has not been able to show a profit for one reason or the other.
Well, probably the most important thing I would remind them of is that, and I use this all the time, Matt. I said, even a big league ball player gets a year to be a rookie. Mm-hmm. Go easy on yourself. Yeah, there are certain types that are really analytical or really driven, and even especially if they've had success in their life, which most of our students have in one form or the other. Mm-hmm. They've been successful in business or their career or whatever. Usually when they work, they see something right away. And trading's not like that when you're brand new. Sometimes it is for some people. Other times, even when you're doing everything right, you might have a losing month because the market just had something weird happen that you weren't ready for or could have prepared for. That's part of trading, whether we like it or not. Most traders I know, Matt, they look back at their results over the course of a quarter or 6 months or a year. Now, everybody I know would love to make money every day. You go into that day trying to make the most money you can make, mm-hmm. Without over leveraging. So it's not that we don't want to make money every day, but when you've been trading a long time, you have the context to know some things are out of my control. All I can do, and this is what I loved about what Milena said, all I can do is follow my system or my rules and just keep going forward, keep showing up every day in trading. If I had to sum all that up to one simple bit of advice, is embrace the struggle and the confusion when you're new. Because if you let yourself embrace the negativity that can creep into our brain, like, oh, I'm not getting the software fast enough, or I don't know enough strategies, or this other student in my class is already doing way more than I am, and you worry too much about what everybody else is doing, you might let that negativity affect your progress. Mm-hmm. And I think it's the most important thing you can ever do is just to simply jump in there every day, run your routine, try to be efficient with your time, and try to find a new trade every day.
Yeah.
Whether you do or don't, work through the process. Go through the motions, as they say, and you'll continue to improve.
Well, I think you got to give yourself an opportunity to trade, and sometimes keep this position size small as you're learning and whatnot. But to me, it's all about perspective. Like let's go, Milena. You were on Broadway for 5 years, correct?
Yes.
Okay. In your first year, were you as good as you were in year 5?
Oh, no.
Absolutely not,
No,
right?
and like I can't. There's so many parallels to working in a creative field as there are in the trading. I mean, I studied dance for 20 years before I was on Broadway.
Wow.
You work and you work, and there's so much rejection before you ever see a payoff.
Mm-hmm.
Like the idea of spending a year of training before you actually make money at an artistic career, like that would be considered a prodigy.
Yeah.
You have to put in so much time and focus before you're ever going to see money in the bank. So that's actually a pretty easy concept for me to embrace. Other people, not. Yeah, I can see how that would be tough.
Well, it's they come into it and they want it so bad, and it doesn't come easy for them. But you really got to go back to the perspective. I remember when me and Tim first started trading 05, 06, and then I kind of stopped trading from 07 to 2010, and just because I was focused on other aspects of it, still investing and whatnot, but not actively trading. And then picked it back up pretty heavily in 2010 and been heavy ever since then. But what we're doing now from a trading perspective is light years ahead of what I was doing back in 05, 06, and even in 2010. It's just you see different market cycles. You learn. It's like you're learning on the job. That first year, you're learning on the job. You're going out there and you don't understand why something happens, why it's going against you. You don't understand whatever the case might be. Have some perspective. Realize this is a journey. It's not a get-rich-quick thing. You got to put the hard work in, and you got to go through your routine, and you got to be structured and disciplined. And that's one thing that I've always said this. And Tim, you caught it very early on too. But I always knew Milena would be a great trader. Always knew it. And the reason I knew it is because discipline. She wanted it, and she wanted to be successful at it, and she was going to go that every single day. And I've never really worried about that. It's now just a matter of getting to the point where you a year down the road and 2 years down the road, you're going to be doing things that you otherwise never envisioned you were doing. Just like you never thought you would be doing inverted butterflies.
I also compare it to playing the piano. Like there was a time when you first start a new instrument, you're learning literally just physically how to strike the keys, and then you're playing this really rudimentary stuff, and it sounds like crap, but you just keep practicing, and then there's this period of time, kind of, you don't even quite realize it starts to become fun. You start to be able to have the skill to play the songs that you like to hear. All of a sudden you sit down and you're inspired by what's coming out of your instrument, and it becomes this positive feedback cycle. And I think any skill is like that. I'm sure you guys now at this point in your trading careers, you have fun. Like, some weird thing happens in the news and you guys are like, yeehaw, let's see what we can do here.
Oh, if you think you get confused, if our students think they get confused when we're trying to teach them, they should sit in on a conversation with Gino, Noah, Tim, and myself. And listen to that conversation for an hour.
And you guys are loving it, right?
It's amazing. It's amazing. I love trading. It's such an enjoyable thing. But it wasn't always the case. Sometimes it was like, oh my goodness, I'm never going to get this. I'm not smart enough. I'm not good looking enough to be a trader. Whatever that negativity was, it's just like, come on now, have some perspective. And I always tell people, like when I'm doing my 3-day workshops, I'm just like, do you guys really expect to master trading in 3 days? And amazingly, there are people that do. They expect that they're going to master the art of trading for 3 days. And I always tell them, I'm like, how dumb must I be that it took me 9 years?
Yeah.
And you got it in 3 days. Am I really that slow? And so you got to embrace the vision. You got to embrace the journey. You got to believe that, regardless of what happens out there in the marketplace, that you yourself can do it better. You got to believe that. And if you believe that, then it's just a matter of saying, okay, now let me learn the strategies. Let me learn the rules. Let me learn how to place this order. Let me learn how to manage this trade. Kind of what we were talking about in the on the inverted butterfly, managing that trade. You know, once you embrace the fact that you can do this, and I know for an absolute fact that everyone listening to this podcast, everyone out there in society can do this. I don't care what demographic you come from. I don't care what income bracket you come from. I know for a fact that every single person can be successful, can control their financial future. And the thing about it is, if you're not going to do it, guess what? Nobody's going to protect you. But you're going to become a story, you're going to become a statistic, and you're going to get it just absolutely handed to you if you don't do something about it now.
Absolutely.
Last question, and then we're going to the discussion on the song. Putting you on the spot, Milena.
Okay.
A year from now, is the market higher or lower than it is today?
Are you talking about like overall, like the Dow, the S&P?
Yeah, major market indexes.
The major market indexes? Well, it's really tough to know because I keep thinking, oh, well, it's got to keep coming down, and then it just keeps going up this summer. If you had a gun to my head, I would say this time next year it'll be lower.
Okay.
I think everybody knows that the punch is being taken away from the party, but I think a lot of people are kind of in denial about what that really looks like.
Is the punch spiked?
Oh, yeah.
Definitely spiked, right?
I mean,
definitely spiked.
Didn't we just hit an all-time high?
The market's a bunch of drunks.
Like,
are you kidding me? Completely drunken on free money, you know. And I'll tell you, I think we've asked now 7 guests, you know, that question in some capacity, and I believe we're 7 for 7 that the market would be lower. I think the only one that has not actually got off the fence and taken a stance is actually my co-host, Tim.
I was just going to say, you know, you guys are making me think of that zombie movie with Brad Pitt.
Oh, World War Z.
Yeah, I mean, first of all, when are zombie movies going to go away?
Never.
For a couple of decades.
Ever.
Yeah. But anyway,
awesome,
there's the one doctor in there, he had the line, I can't remember it, paraphrasing, but he's like, you know, I'm part of this society where there's 10 of us, and if all 9 people have the same idea, then the 10th man must explore the opposite. So if all 7 of you people we've asked all think the market's going to be lower, I'm going to have to go higher then. I'm just going to have to be that lone wolf.
No. See, that's 7 out of 7 on this one, though. I mean, if you're taking the opposite approach, you're taking the approach that the consumer Americans are taking. And I'm betting against the public on this one, buddy.
Well, I wonder if the public thinks the market will be higher, or if they're just content with the life they're allowed to live right now.
What percentage of the public in 2014 actually knows the market exists?
That's what I'm saying.
Yeah.
I mean, that's why the Federal Reserve believes that they're in the right to do what they do. They print money, manipulate public opinion and perception, just so it's like an emperor has no clothes world. Mm-hmm. You know, they're duping people out there. They're completely. If you think about where inflation is and the standard of living, I mean, I went to the grocery store. I say this all the time. I went just to buy dinner for my family yesterday, Matt, and I had my brother-in-law coming over.
Oh, okay. So you had multiple people.
There's 6 of us, 2 kids.
Gotcha.
Okay, 4 adults, 2 kids. Guess, and only food for this meal.
Okay.
How much do you think I spent?
Well, hold on. We're gonna delve into this. Now, did you have an appetizer?
Chips and salsa.
Okay.
I did buy some good salsa though.
Okay, good salsa. So you had chips and salsa, and did you make fajitas?
I made ribs.
Okay, ribs. Okay, pork ribs.
Got the ribs on sale, baby back ribs.
Okay, good. And what was your side dish?
We did au gratin potatoes and a Caesar salad, and we had rolls.
Well, so the Caesar salad is going to spike the number. I'll tell you that right now. Especially if you didn't go you got the good dressing, right? You didn't get the cheap dressing.
You got to
get. If you're going Caesar. Yeah. Okay. So. How much do you think he spent on this meal?
I'd say $65.
$65. I'm going to say, I know I'm low. I'm saying
This
50.
is feeling like the price is right to me, right?
I'm saying $58.
$67.
Oh,
Yeah.
boom. 60. Man, I've been low every time I've done that.
Well, and I even got the ribs for a good price.
When you said on sale, it threw my numbers off, man. I was thinking, were they 3-day old? I mean, what type of sale?
No, they were good ribs. They were just advertised special, $3.99 a pound, I
They
think,
weren't going dark
for
on you?
baby backs. Yeah,
Oh, $67. And you know what? That's amazing.
it's crazy, man.
Yeah.
I
But
know
we're
it
only
makes us
inflating at
sound
2%.
old when we wax nostalgic about the price of stuff 20 years ago, but I still remember buying my first car and filling it up with the entire tank for like $15 all the time.
Wow.
I filled up my truck the other day. It was $120.
Oh.
Yeah,
Yeah,
I believe it.
$120. That's a little gas up. Yeah, don't get me started. But yeah, I mean, that's the concept we call inflation, guys. And, you're right. It makes it sound old, but we're talking about what prices were 5 years ago. Not our grandpa talking about walking uphill both ways just to buy a Coke for 5 cents.
Yeah.
So it's something I think, honestly, inflation is one of my biggest concerns out there. And I think what we said we saw a 0.07 increase in wages this past week. That's a triggering effect as well. That means people are making more money in their jobs. Cost of goods and services is going to have to go up due to that, and the Fed is going to have to act even faster because of it.
No, I'm going to actually answer the original question then. I
What
do
was
think
the
the market
original
will be
question?
lower. You're moving into an interest rate environment that's going to be going up historically, and especially the way banks have positioned themselves. They're probably going to transition into more fixed income at some point, away from equities, maybe even back into commodities. I mean, we've seen gold and silver take hits for years and years and years. I don't think they're ready to be bought yet.
I'm gonna name it the Great Rotation.
You're going to see some rotation of capital.
The Great Rotation.
And simply put, I mean, when the Fed pulls the complete rug out from under the bond market and then starts doing what they're going to do, which is raise interest rates naturally, you're going to have to see a rotation of capital. Now, whether that's a crash or not, I have no idea. I think it could easily spin into that at some point, but usually it requires some catalyst. The bond market's a weird thing. Like real estate prices, Matt, they were directly tied to people. So the catalyst of that crash was that your house, you could no longer afford it and you were getting foreclosed on. It affected individuals. The catalyst here, I think, would be mid and small banks. I don't think it may not even be consumer driven. It might be bank driven. Because as this rotation happens, I think the big multinational banks and the investment banks, they kind of have had the first go at it, and they'll probably position themselves okay. It's what about that regional bank, that was forced to take loans for the last 7 years or 6 years at rates that they can't make that much money on long term. I mean, what are their balance sheets going to look like when interest rates have gone up and they're still have all their money tied up in long-term loans that aren't really making them anything? I don't know.
Well, I think it's an open question, but I think it's something that's going to have a direct impact on the market behavior. And that's when we talk about the rotation, I'm talking about the banks, guys. I truly do see investment banks out there. They got to rotate money. If they're not going to make any money in interest because the interest rates go up, they got to rotate their money back out to something else. And maybe it is commodities. Maybe gold finally gets the bounce that it's, any gold bug has been wanted for 2.5 years. What happens in the bond market. There's a lot of different markets out there that things rotate to. But I will tell you right now, and you know what? We always say this: trade with your eyes, yada yada yada. But at the same time, I see a rotation happening, and I think it's going to be a negative impact to consumers out there in America.
Yeah, but then I'll give one last bit of advice, and then I actually do have one more question for Milena, if you'll let me. But I'll tell you this: don't let your political and worldview about what may happen at some theoretical point in the future affect what you do today.
Yeah, that's true.
If the market bounces tomorrow, you've got to play accordingly.
Well, Tim, just to kind of go on that, in looking at the market today, I was doing this last night. I was in my master trader class, and I was talking about how with the sell-off last week, this might be a good opportunity to get into some good, healthy stocks that have been consistent, performers for the better part of the last year.
Yeah.
And because we saw a lot of stocks that are just really good stocks just sitting at support. Southwest has been one of the best stocks out there, sitting at support. ADM sitting at support. Marriott sitting at support. And it
why is Priceline up 3.5%?
Oh, earnings expectation.
Something happened with them. Anyway, we can come back to that later. The question I had for Milena is, after a year of trading, have you started developing your own rules? Or are you still relying on the stuff you were mostly trained on?
That's a good question. I think probably a little bit of both. I'm mostly relying on what I've trained on, but I'm also trying to up my game and learn more and learn how to finesse things and I've kind of developed some of my own in addition to
good
what basics really are and now I'm really just testing them out and just seeing what's working and what's not and but also I'm working on not being afraid to try new things.
Good, very good. And embrace that mindset. You have to have a balance of both. But the best traders I've ever worked with, at some point they get away from the book and they start just being themselves. If once your skill set gets up to the point where you're competent, you're consistent with applying the rules and the guidelines, you will need to develop some of your own style. And that's just a natural thing. If you're already instinctively going that way, I would embrace that and just let your mind go down that path.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.